How y'all doing? This is Witchell Joseph, Trading the Markets edition. Thank you for tapping in, tuning in. First of all, I'm not a financial advisor, but I am a day trader and a scalper. And today I just wanted to talk to you guys pre-market about the state of the market, and what we could probably expect, and how we could play the levels. And I'll even give you guys one free play if you stay till the end. So let's get into it. So I wanted to start off with some charts, and I don't know if you guys know how to read them, but I'll give you guys a crash course and we'll dive in. All right, what you guys are looking at right here is the S&P 500. So when people talk about the stock market, this is what they're talking about. Because you got to understand that this has 500 of the top companies that's in the US. So this is a good representation of the stock market as a whole. So before you do anything, you want to look at this. Before you want to trade Apple, you want to trade Walmart, whatever you're trading, you want to see what direction this is going in. Because if you fight the market, a lot of times you'll lose unless it's something that is not correlated to the market or has an inverse or does the opposite of what the market does. But we're not going to talk about that. We're going to keep it really simple, and simply you want to look at this every day and follow the market. So you can look at it through the SPY, which is the ETF, or to look at this bad boy right here, the ES Mini. These are the futures. So understand that the futures, they run like 24, not 24/7, like 24/5. So when the market is closed, the futures are still running. So a lot of times you could say the futures are ahead of the market and they show you where the market could be heading, or usually is heading, I'll say. And so we're gonna look at both of these and we're gonna compare them, and then we're gonna really mark up levels to see what has been going on. So if you notice right here, you'll see that the ES has 4 digits. So this is at I'll call it 3681, so it's all about numbers. And the more you get a better relationship and understand the numbers, the better and easier it'll become for you. But understand this, trading is not easy. It is, however, simple, but the hard part is that you're going to mess yourself up. So in order to combat that, you have to play a psychological game where you trick yourself and beat yourself at your own game. So how, you might ask? So get a journal. So I have this journal right here where I post, my plays. And then I have this journal right here where I post my emotions. So if you're able to control your emotions, then you can actually play this game with a lot of accuracy and a lot of probabilities on your side. So that's what we do over here. So let's get into it. So first of all, notice that ever since the year started, we've been going down. Oh, if you guys know how to read them, really, really simple. Red means goes down, the opens at the top, close at the bottom. Green means goes up, open at the bottom, close at the top. So that means, so for example, on this day, because we're on the daily chart, is like, everyday price action. So on this day, January 5th, we're at 47.78 or 4,778. But I'm just gonna say it like this because I think it's easier. So we were at 47.78, right? And we closed that day at 46.94. So you see right there, that's about 100 points on the E-minis. So that's how you read that. And then the green, like I would say, so it opened right here at 43.45 and it closed at 44.20. So if you're wondering what this stick is, this is the wick. That means that at some point throughout this day, it made a low of 42.65. Like this one right here, you see this stick on the top, that means it's a wick on the top, and that day, that candle made a high of 44.44. So in case these numbers might just seem too big for you to keep track of or think about them, the easier way is to look at the SPY. We just basically took away a digit. So notice that the ES, if I take away this digit, you see 368, right? But if I go to SPY, we have 367.95. So we're basically at the same level. So this basically follows the ES to a T. So the S&P 500 ETF follows the S&P 500 futures pretty close, almost to a T. So now that we got that out the way, let's talk about what's been going on. So the whole year we've been going down. You know, we hit these highs in January. You know, we almost hit 480, and then we look at where we are today. Pre-market, we're at 365. So that's more than 100 and 480, 120 points down, and the year is not even over. So that's crazy. And you'll see that on Friday we closed at 367. That's what this number is right here, in case you're wondering. Pre-market, that means right now before the market is open, stocks are being traded, and this is the price level that we're at. So right now we're down pre-market. So that means that if we open up, if it stays here, we will probably gap down. Like you see this gap right here, that's because from this day to that day, it opened up lower than where it closed at. All right, so pre-market, this is moving lower. So by the time it opens, we might catch another gap down. But pay attention to this level right here. This blue line right here. Let me focus more on this. Now that we got the bigger picture out the way. So right here, this blue line, this is the June lows. So this is the lowest we've made since we're at this level since 2020. Since December 2020, basically after COVID. Well, after COVID started and things started recovering a bit, that's basically where we at. So it made sense that we had this reaction right here on Friday where it bounced basically in this area. You can even call this a demand zone. Like on the ES, I drew it out, but you see this green box right here? This is basically a demand zone. Demand zones, they're areas where the market will have a high probability of seeing a reversal, whether it's short-term or long-term. So you see that there was a reaction in this zone where it did pop up, but it doesn't mean that we can't get through these zones, because sometimes, you know, these zones get broken. But the idea is that old orders from the past are trapped here, and they're going to trigger when they finally reach again. So that's that, right? So now going back to SPY, to keep the numbers real simple, I think 367 is much easier for you to say and think about. So what is this gray box right here? So this gray box right here, this is what we call the expected move. Based off of options and premiums and how they're priced, the market guesses how much things are going to move. So for example, I think last week, I should have drew the box from last week, but it didn't think that it was going to move all the way down here. And because of that, we made a lot of money beating the expected move. So this is usually like within a week, I think, or a month. I'll get back to you guys about the exact math that goes into it, but basically this is the range, and you can look on Thinkorswim and it's going to tell you the expected move based off of implied volatility. Implied volatility is how much we are implying the market we think is going to move. You know, stocks don't have implied volatility. Why? Because stocks you can hold forever. This is time sensitive. Therefore, we can make guesses by a certain time. And if we're right, the market pays us handsomely. If we're wrong, we suffer losses. But that's why we always use a stop loss to minimize losses and maximize gains. So that's the SPY. So the main thing is, as far as the levels that I have, is 360 is basically a psychological level where people see cycle. But honestly, once we break the lows, things could really get ugly. And I think 349, yeah, that's where I put a little bit of support right here. I'll say 353 actually. So notice that this is an area that was resistance. What is resistance? It was the ceiling. Guess what? The ceiling became the floor. These are areas of interest and where there's usually a lot of volume and a lot of activity where people try to protect, you know, certain levels and hold it down. So that is my analysis of the SPY. We're just gonna go through a couple of different things. So what you want to do every day, you want to look at the SPY. I look at the SPY, that's my favorite. You can look at the ES too, because especially when the market's closed, you can know what's going on the night after the market's closed, even the morning before, like now. So notice that the ES right now is at 367.8. So remember, I think this was at 360, so it's dropping. Okay. All right. So now let's go into the VIX. So the VIX is it's the volatility index. Hold on 1 second. Let me just type it in. I realize it's not on my list. Hold on. All right, y'all. All right. So the VIX. So VIX is the VIX, and I don't know, guys. Remember, I did tell you guys about this. I said we were trading this range for so long that eventually volatility is gonna have to test some of this other upper range. So now it looks like we're definitely heading towards 34, and we may even go higher. And this is when the market gets crazy. This is when a little bit of money can become a lot of money, especially when you're positioning sizely and you start to get volatility. So, and I told you guys to buy VIX calls, and I told you guys to start buying puts. And if you did, you would have been rewarded, especially on Friday and Tuesday. So now that we're in this range, it seems like 434 probably be the next range on the VIX, and this is our indicator that things are about to get crazy. All right, so that's the VIX. And I'll show you guys the options to play on it after. The other alarming thing is the 10-year Treasury notes. Wow, you guys understand that bonds really are direct competition with the stock market, because usually people, like, unlike me, maybe like you, they have a problem. They have too much money. So if you have too much money, you need to park it somewhere where it can just work on its own without risk of being down, 30% like the stock market is. I mean, I'll see the exact percentage of the market. I think it's more than 30%. Actually, we'll go back to spines and I'll give you the exact percent that the market's down. But yeah, being down 20-30% versus you could be in something that's still gaining. And right now, because of the interest rate rising, you can get the Series I saving bonds. They're offering about 9.23%. So right here, yeah, 9.62% on the savings bond, right? And I'm not suggesting anybody get this, because you're gonna understand the pros and the cons. You're gonna tie up money. You get penalized if you take it before 5 years. You guys can read all this. I'm not gonna really go into it, but the main thing is that for at least 6 months, they're gonna guarantee that 9.62 rate. So if you have money, like, why not take that 9.26 without risking the stock market, and what it's doing right now. So basically, bonds are taking money out of the stock market. This is one problem why the stock market is going to go down. So I'm just going to stack the chips so you guys can see the different confirmations and confluences for you to make your own decision. But there's a lot of objectiveness that's leaning towards the bears. The bears definitely have it right now. Doesn't mean it can't change. Doesn't mean it can't bounce. But right now, the Bears are in control. And if you don't know what I mean by the Bears, I don't mean the football team. I mean, so if in stock lingo, if you think it's gonna go down, you're a bear. If you think it's gonna go up, you're a bull. All right. So going back to CNX, so that's what else? The dollar, very, very important. The dollar. So what I'm showing you guys are what you can call drivers and internals that move all markets, not just the stock market. So let's see, go to, what did I say, the dollar. So DXY, this is the dollar index itself, right? Now, what I do is I play options off of UUP. Look at DXY, look at the price. Look at UUP, same chart basically. More gaps, it's just gaps, but it's basically the same chart. And you'll notice that it's a way cheaper price. So I'm able to get in the play for way cheaper and make more bang for my buck. The beauty of options is that for a little bit of money, you can get huge leverage that you can participate in a big move with a little bit of money. So we're gonna get into it. Let's keep going. So the dollar, you gotta understand what I'm showing you guys, the VIX, the dollar, these are inverses. So that means when they go up, the market goes down. So it's cool because you can still play up positions on inverses when the regular is going down. So notice what I did right here. So I had different areas. So this was an area of resistance, but notice it broke through. Remember I was talking about these zones? Look how this zone bounced right here. It bounced again. If I extend this, you could say the zone bounced again. So this is why these zones are important. But just because it hits the zone doesn't mean to do the reversal, because it may not. So you have to be patient. So over here, we don't guess, we react. If we guess, maybe that's with time, long term, and that's also with like confluences in the charts. But for the main concern and strategy, guessing is not part of it. All right, so, and this is also a 3-bar play, but you know what? I'll take 2 minutes to do this real quick to go over 3-bar play. So how could you have played this? So whenever you have a strong bar and you have opposite bar, what you're looking for is basically breaks. So you could either do the wick or you could do the body, right? But so let's just say I do the body, right? So the break of the body would give me a good risk where if it broke down to the down, I could have played it down. And then either the body or the wick, once it breaks, that's how I knew to enter in that direction. So you basically wait for the outer boundaries to break and have a strong reaction, and then you enter. Very simple. Yeah, but definitely show up to class. I do classes Monday, Tuesday, and Wednesday. So Monday and Tuesday at 8 p.m. Central Time for free. And Wednesday is a paid class. If you're interested in joining, learning more game, more sauce, definitely sign up for my coffee page. And let me show you guys my coffee page real quick. Let's see. Actually, let me get through this. I'm trying to stay on topic. At the end, I'll show you guys my coffee page. Yeah, if you're interested. But the link is, you know what? Let me just drop it anyway. Let's see, link to my coffee page. This is where I drop videos and call outs, and I have members and a lot of information for over a year of information and classes, wealth of information available to you guys, including myself. But yeah, going back, so where we going? Oh yeah, we're on a dollar. So I'm gonna show you guys some plays on the dollar that you guys can make in a second too. And then the last bit I wanted to show you guys was TLT. TLT. All right, guys. So, yeah, I was going through some charts. So I said, waist. I really like ETs to the down. ET looks really good to the down, and look at how straight line this is. So this is a runaway train, and you ain't gonna stop in a day. So I expect movement like this, and potentially it could fall all the way down to this support at 980 with enough time. But 1030, that's short-term support that we might hit today or in a few days, and then 1018, and then not much till this gap fill. So that's and then open. This has been on a downtrend forever. Not forever, but all year. Um, kind of like the market, and it's been more bearish than the market, I would say, because it's really been favoring the down a lot. And Friday it did go green, but to me that was a good day to pick up more contracts just to short it and for it to keep going down. UVXY. So first, the VIX is breaking this. The VXX is one way to play the VIX. It's a ETN, which is an exchange traded note. That just means it's based off of debt and not shares. But that's neither here nor there. So the main thing is that it's breaking out of this green resistance line that's been drawn since May 3rd. And it broke out and it came back and retested that line and it's holding. So that's a very good indication that's going to keep going up. And matter of fact, pre-market is already up. So this is how technical analysis basically works. When you see high probability patterns and knowing scenarios that can play out and not guessing, but reacting. So right here, same thing. I see that UVXY, which is more liquid. This is the actual ETF of the VIX. Because you can't buy the VIX directly VIX, so you got to buy these. But they offer really good risk to reward. And on Friday, off of this, I have bought options for $12. By the top of here, it was about 45. It was worth $45. So yeah. So that's the UVXY. So now let's go and think or swim and talk about some of these plays. And the market will be opening in about an hour. So I'm gonna try to wrap this up. All right. Let's see. Go to all right. So I'm gonna my think or swim and I'm gonna show you guys a play. Give you guys a free play, and then I'll go back to my dashboard and show you guys what I do in the morning. So let's see. All right. Go to swim. All right. Boom. All right. So this is the demo account. I do a lot of trading here, and I use it to benefit my live trading. So the play that I want to put on your radar is UVXY. Here's one I've been watching for a couple of months. I kind of forgot about it, and then I see it's been moving. January, yep. So January. All right. So this is the option chain. So you go to trade, trade. Then you go to you type in what you want, which is UVXY. Typed it in. Then I come down here to January, right? So now all the way out the money on the calls is this one right here, all at the bottom, the $75 call. And mind you, UVXY is nowhere near $75. It's actually $11.88. But you gotta understand with that, with time till January, it don't even gotta hit 75. It just gotta move in a direction, and then you can make money, and you have enough time to hold it and not worry about the fluctuations. So, so as you guys can see, I already have an order to buy it. You know, I'm at 40. But the main thing is looking at the charts to see where it's been. This is why I love Thinkorswim, because I can look at the option and look at it as a chart and know where the prices have been and make sure I'm getting at a lower, you know, a good price. So go to chart and I have right here. So right here, you'll notice this is UVXY. This is a $75 call. And you'll see that it started breaking out on Friday. It broke out. But on a greater scheme, like if I if I zoom back out, let's see. 1 year, 1 day. Oh, I gotta hold on. 1 year, 1 day. So right here. So look, back in last year, because you know this had time on it. This option was going for 1,200, but you know, time has gone by, right? So then if we zoom in to, we'll see that this was worth about 400 in May and $321 in June. And you see since then it's been on a downtrend, right? So let's see. You zoom in a little bit more. So right here, yeah, this is where you see that let's see, this is July. July was about 80. And then August, we see it around 30. So this one it came down in August around 48. But it hit at 58 in August 11th. And then now we see that it finally broke out and it's making some effort. So this is why I like it a lot, because when you have options that have time on them and they broke out to a high point and now they've been beaten down and there's time and there's catalyst, then this has a really high chance of going back to 300s and maybe even higher. So yeah, so that's a play that's on my radar that I'm gonna be getting and buying. So that's the free play right there. All right. Aside from that, let me see what else I have brewing. So I have these contracts on open, SPY. You notice like some of these puts, like I really look at them like this 351 put for today is attractive, but I'd rather put time on it. So maybe this one for Wednesday, or even these ones are not bad too for 14, 330 put, give it some time. You know, so if you notice, I'm only buy out the money and I tend to buy cheap. Now let me go into my real account. Let me stop recording for a bit. All right, thank you for tapping in. See you guys in class tonight at 8 p.m. Free class, come and learn. 8 p.m. Central.